Fed cuts, stocks soar. Well, investors banking on the Federal Reserve cutting interest rates at its next meeting. It's just about 2 weeks away. So if rates are trimmed, will that lead to another wave in this rally? Let's get the read from our money gurus today, Rebecca Walser and Melissa Armo. Ladies, great to see you. Thank you for being here. Rebecca, haven't stocks pretty much topped out now, and because they've already cooked in that quarter point rate cut later on this month, right?
Absolutely. I mean, the market is definitely at basically 100%, David, at, either it's going to be 25 or 50 basis points, one or the other adds up to 100%. So people are counting on it. It's baked in. But, if you look at the history of the Fed rate cuts, they cut at the top of the market, meaning that is the top out, and then we come down. So the fact that they're cutting is indicative that they're seeing data that is problematic, certainly on the labor side. And so it's not actually a good indicator that we're going to have a bull market coming forward. No way.
Though last week we saw a huge rise, I think a big rise in the GDP. We got that 3% number coming in. It was a second read of the second quarter number. But a lot of people are skeptical, particularly after that 813,000 jobs that just disappeared a couple of weeks ago. I mean, that makes people wary of the numbers. Do you believe in those strong GDP numbers, or are you skeptical?
I think it's really hard to believe in any of the data that we're seeing right now. And the biggest problem is that the Fed is making decisions whether to cut, hold rates steady, or even raise rates based on the numbers. I've never seen consecutive revisions as great as we have seen in this administration. It's almost shocking, actually.
Yes.
And the fact that the Fed is relying on those numbers to make decisions is really problematic. So probably what's going to happen is that the Fed's going to be late. In other words, maybe they don't cut in September, or maybe they cut only a quarter. Remember, at the beginning of the year, we thought we were going to get 5 rate cuts this year. The market kept plugging higher, going higher, making new highs. And here we are, it's September, and they still have not even cut a quarter point yet this year.
And Rebecca, we've got an election come up. We can't ignore it. And Kamala Harris has already come out with her price gouging plan. She says that doesn't necessarily mean there'd be price controls, but that's what a lot of people would say it leads to. Even people on her side, even Democrats, have come out and said this is a terrible plan. Price controls don't work. So isn't the market going to get skittish about some of that?
Well, the price controls are not, a republic. they're socialistic, Marxist, communistic. We've had that before. Richard Nixon in the 70s. It doesn't work. Yeah. It does not work. You have to let the market do what the market does. And by the way, David, there's already a ton of market manipulation with stimulus, monetary and fiscal policy. That is enough. You start now having the executive branch come in and start setting price controls when you're looking at what she's talking about too, the cost of food, the margins on restaurants, groceries. These are minimalistic, can barely stay in business.
We've got a grocer coming on in the next segment. He's going to talk specifically about that. But what about taxes? Because we know that the tax cut, the Trump tax cuts are going to expire in 2025. So the next president will have to come up with a new regimen, or if it's Trump, he might just continue with what we've had. But if it's Kamala Harris, we know that corporate tax rates are going to go up about 30%. We also know she may institute these wealth taxes. What effect would all these hikes in taxes do to our economy?
I definitely think I have a more bullish outlook on the market going into 2025 if Trump wins the election in 2024. If you remember back 2016, the market was down. The futures were down huge. Everyone thought Hillary was going to win. And then it completely did 100% reversal into the next day. If you bought the market on 2016, the election day, the day after.
I did.
You made 100%.
Because I saw a Paul Krugman column in the New York Times saying the markets were going to crash. Yeah. He's the reverse barometer. Yeah. And I was right. There is one exception to what you two are saying, and that is the fact that markets tend to like divided governments, right? I mean, in the past it has. So, I mean, say there is a Trump victory and the Republicans take over the House of Congress and the Senate, might markets react negatively to that?
I mean, I think the markets could react negatively to a lot. And I'm on the opposite section of Melissa here because I just am not, I'm very bearish because of the fact that we have $1 trillion of new deficit spending every 100 days. We are in a debt cycle now at this point, David, that we can't sustain, with interest being one of our top 4 expenses, you know, more expensive than the military now. This is not sustainable. This is a huge problem. And Americans just can't go on and act like everything's going to be normal. No, it's not normal, and we have to deal with it.
So bottom line is, you say if Trump wins, he's
going to have to rebuild the economy here, and that's going to take some work. Even then, absolutely.
Okay.
Yeah.
All right, ladies, thank you very much. Good to see you both. Well, Kamala Harris